Okay, let's move on and let's take stock of Tech Mahindra's earnings now. We've got with us Milind Kulkarni, the CFO at Tech Mahindra, joining in on the show. Milind, hi, good morning. Good to have you on the show. Excellent quarter and a very positive commentary from you all. Just going through your analyst take takeaways right now, and you've said some very strong commentary with regards to your communications as well as enterprise verticals. What I wanted to understand, Milind, is that if it would be fair to say that communications as well as enterprise are set to see high growth in the near term as well, and could this really translate into a multi-year growth trend as well for you all?
First of all, thanks for having me on your show. Okay, yeah, it's been a good quarter. Thank you. And yeah, there is a strong demand environment for all the IT companies, and so also for Tech Mahindra. And we are well prepared to seize that opportunity. Okay, and when we do not give guidance, as I said, what is true for the entire IT industry is going to be true for us because we are well positioned to seize that opportunity. And both communication vertical with led by 5G, on the back of strong 5G wave that we have seen, and in enterprise the verticals like BFSI, high tech, healthcare are should see a strong growth.
Sure. Milind, what I also wanted to understand was that in your recent analyst meet post the second quarter numbers, you seemed very confident that margins are going to sustain at the current levels. What levers currently prevalent give you this kind of confidence at a time when you have supply side issues which could actually bear heavy on the margins for that matter?
True. Supply side issues in terms of high attrition leading to a high increase in salary cost as well as subcontracting costs certainly are there. Plus, I think as the travel might restart gradually, and that could be a headwind. On the same, there is going to be a volume growth, so that's going to help. Secondly, yield management in terms of looking opportunities to get the better prices, and our focus on delivery excellence. We should be able to take care of the headwinds and kind of maintain the margins at the current level. So overall, and in the beginning of the year, we are given a guidance of double-digit organic growth and EBIT margin of about 15%, and we should be able to maintain those.
When will your margins start converging towards what the top four companies have? Right now for Tech Mahindra, the margins are not best in the industry. When do you think you will start going to what could be called as industry benchmarks?
Yeah, you are right. We should be moving gradually in that direction, and it's not going to happen in 1 or 2 quarters. But our endeavor is to move towards, maybe 18% EBIT margin, but that's something which will take its own time. Because we have to balance also between growth and demand.
Now that offices are opening up, work at home is there, but it is not as prevalent as, let's say, what it was a year ago. Travel has started normalizing. Will that start having an impact on your SG&A cost? Will that start having impact on your on-site travel cost?
there will be some increase. I mean, the travel, as you rightly said, has started opening up. It would increase to slightly higher HGNA. But two things. One is the higher volume would help us to take care of it. Second, when we are able to depute the people on site, it would also help us to control the subcontractor cost. Because today, because of the travel restrictions and because of immigration related to COVID restrictions on immigration, we depend, our dependence on contractors have gone up, and that we should be able to correct it. So it's not, I mean, there is going to be headwind, but we are fairly confident of managing it.
So as we roll over from 2021 to 2022, and a question which we often try to understand is that what is the outlook on IT spends? Do you think the entire IT budgets will continue to grow, or do you think somewhere the sugar rush what we saw in 2020 and 2001, that will start reducing? What we're trying to understand from you is that IT companies have done great, and largely that also could be largely because COVID in a sense forced companies to adopt digital and IT measures. That may not happen going forward. Now that life is normalizing and now that a lot of measures have been, a lot of IT spend has been preponed. So what is your sense?
I think what we sense today is that the IT spend will continue to grow, and on the enterprise side, and we see, I mean, as you know, we are strong on communication vertical, and there we see a growth led by 5G. So, I mean, at least the visibility for the next year seems to be, the demand should be strong.
Good morning. This is Nantara. We were just going through your large deals as well, the $100 million plus, which is up by nearly 4 times in the last 3 years. Since you're talking about 5G, is that where you're going to continue to see, is that where you're going to see these kind of big deals coming in? Is that what has Tech Mahindra enthusiastic as future prospects?
5G right now is not leading to large deal, which we call 50 million plus. But there is a strong revival in the communication vertical led by 5G. But our large deals are, partly result of the focus that we have put on the large deal, and we have now new large deal teams exclusively. We have teams exclusively looking after large deals, and we are not waiting for RFIs to be invited by the customers, but we are making proactive deals as well today, and that's just helping. 5G per se, right now the deals are small in size.
So let's leave it at that. Right now, the 5G pie is small. It's the one that can be scaled up. That's Tech Mahindra for you. Bullish commentary that we've seen in the analyst call as well. It's often called the dark horse of the IT sector. Maybe that's why Nikunj was also trying to get out when we would see the margins equate with the big guns from the IT space. With that, we're going to take a short commercial break. Stay tuned. A lot more coming.